All right, everyone. So I'm going to go over a game plan for the week ahead. I'm going to share with you my metrics from last week, but before we do, we'll just look sort of high level at some of the highlights from last week. And this will help guide what we can maybe expect for the week ahead. So I like to pull up my continuation scanner here. This is a scanner that I run that searches for essentially the stocks that have had the biggest range in the last 2 weeks. That's how I'm sorting it. So APM is the leader right now. This stock has been ridiculous. I mean, it was at like $1.75, hit a high of like $18, came all the way back down, but bounced back up. Now, it's on the scanner, which means it's worth taking a look at. But I can tell you right now that there was no trades on this on Friday to me. And I don't think there'll be any trades on Monday or Tuesday. Realistically, this stock is on the backside of the move. You know, let's be honest. It had its day. It had its 15 minutes of fame. This was its spotlight. It was a one-hit wonder, and you know, it's done. Like let's try to just let it go. So, unfortunately, what's going to happen is traders, if they see it pop up with news, are going to jump in aggressively, and they'll think, "Oh my God, you know, it made this big move on this day. Maybe it could do it again." I can tell you that's unlikely. Usually we don't have a huge move like this and then another one. It can happen, but it's not common. And the main problem is that this move didn't hold on that same day. When we have multiple back-to-back days, that's different because the stock was really strong on one day and it continues into the next day. Holo is a little bit of an exception here because this one had a big day, continued into the next day, which made sense, pulled back for 2 days. Then it goes all the way back to the highs. So no, it went back to the highs, but it pulls back and then it kind of held up and then it did a blast off. This is unusual, but even that didn't end up holding up. So I don't think we'll get something like that on APM. That could be wrong, but I just don't really expect it. In any case, $9 is a line in the sand, the high of Thursday. And then the next level is the high of this candle, which is about 1098. So from a technical perspective, it definitely has room on the chart, but it would need some pretty strong news in order for it to move higher and really clear out both bag holders who are in from too high on this day and short sellers who are going to try short pops for a reversal back down. Now, the second leader in terms of range in the last 2 weeks is SWIN, and this stock made a crazy move last week on Wednesday, squeezing all the way up to $70 a share and then dropping to $11. I mean, I don't even know what to say about these kind of moves at this point. Like, this is unreal. It's really crazy. This stock is ridiculous. The pop, the drop, the pop, the drop, the pop, the drop. I mean, you're on a real roller coaster with a stock like this. So no interest in that. I don't want to blow up my account. So moving on to the next one, LYT. Big range in the last 2 weeks, but it was fading pretty much all of last week. It's just holding the range because it had made a big move earlier. PBM, same story, had made a big move a couple weeks ago, is pulling back. SPRB, too cheap, no interest. AMLX, a little cheaper, $3.25, not interesting to me. Has a gap down, which gives it the big range. STI, no interest, really. It's a little lower priced. I know some traders like these ones, but I don't find myself doing well on them. AISP, this one's continuing higher. It's worth watching. We could get some fireworks potentially on it. You know, the float's 18 million shares. It's not nearly as low as HOLO, which I don't know where it is on the scan now. It's probably further down, but it could be worth keeping an eye on. So I would say AISP is going to be on my watch list for next week, most likely. We'll see if it has news that can send it, but it's a somewhat recent SPAC, sold off, and now coming back up. So that setup can work. It's getting a little more expensive right now, but even in spite of that, I think that there's maybe some opportunity. PIK, I'll skip over this one because it's too cheap. PIK, nice price, nice float, but you'll recall, oh, right. Yeah, it's a stock that made that big move pre-market and super early at like 5 a.m. Most of us missed it, which was super annoying. And all we got to do was watch it sell off, hit a high at like 5 a.m. and then pulled back. I think that we did see a few moves last week like this one that occurred early pre-market between 4 a.m. and 7 a.m. So that sort of 3-hour window. You know, occasionally we'll see that. Sometimes right at 4 a.m. we'll see an algo spike. The problem with that 4 a.m. algo spike is that What seems to happen is 4 a.m., all of a sudden, a stock with basically no volume starts like getting jammed up. It's a high frequency trading algorithm or something. And then it's on very light volume. And then short sellers come in and just start selling, 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 selling. And then people that were in start selling. And so the volume profile of these typically is you've got this, I don't know where my green, there it is. So you've got this big candle here on light, but baby volume there. And then we begin selling off. And the selling is on high volume. So we're just selling on really high volume, and it's just selling and selling and selling and selling. And the volume bars just stay really high. So honestly, it just feels like such a trap when that move is on such light volume and the selling is this high. It's kind of ridiculous. So I find that to be, I don't know, pretty transparent that something shady is going on. I don't trust it. Now, PIK wasn't part of that. PIK did have decent volume on this move up. It did. It had good volume, but it didn't end up holding. I think maybe at the sometimes tail end of when it's really hot, we'll see more of these pre-market moves, and then it starts to just cool off a little bit. As you know, most US traders will not start trading before 7 a.m. Most US traders are using retail brokers like Thinkorswim, and they don't even allow trading before 7 a.m. So right at 7 a.m. is when we usually see volume come in. Now, there are brokers that allow trading beginning as early as 4 a.m., but this is, I don't know, maybe more European traders, but just not as many US traders during that window. So anyways, PIK, it's tough with that big red candle on the daily to think that we're going to get any continuation on that one. On Friday, we had Verb, VERB, lower price stock, but it put in a big move, but it pretty much gave a good chunk of it back. Not all of it, but it gave a lot of it back. So to summarize my week last week, it was bad. It was disappointing, to say the least. I had kind of a tough day a week ago Friday. Was up like 7,000, then gave back 5 of it off the top. Felt a little frustrated with that. And I think when I came in Monday morning, I just got stubborn. I didn't want to have a red day, and I just let emotions get the best of me. So that was a setback for me, definitely. And then what made it worse was when on Tuesday I came in swinging big and just got totally destroyed. So I did a case study of that big red day that I had on, I've got to scroll way up here. I did a case study of my red day, and we can look at a couple of case studies. So my case study on Verb, this was the stock that had squeezed up on Friday, 350%. That's 400. It did probably get hit at a high of like 500%. Huge move. Had news with Facebook and Instagram in the headline. But for me, too cheap, no trades. APM case study from Thursday. Stock goes up 88%. It gave us a continuation move, and I didn't think it would go that high, but I traded it, and I got some trades on it. So I ended up making about 5,000, 4,000 on APM. But let's see, GXAI, this is another one. Yep, 8,000 on that one. So this was leading gapper, 700,000 share float. Yeah, I mean, when I see a float that low and a stock pops up with news, I'm going to pay pretty close attention to it. And we got a nice micro pullback there at 650, and it just kept going higher, 758, 859, all the way up to about, what was it, $17 a share? I mean, that was super impressive. And realistically, it only takes a couple of those each month to have a great month. But the biggest loss of the year for me was on Guts, a recent IPO that I jumped into very quickly with too much size. Despite it having news, I got smoked on it. So after that trade, I recognized that I had a moment of emotional hijack. I took way too much size. I was being way too aggressive. I got stubborn on it, and I didn't wait for a good pullback, a good setup. So I realized that there were a lot of things I probably could have done differently. And these are actually part of the next steps that I'll talk about in a second. Oh, come on. So I had several close calls in the previous week. I didn't scale back quick enough, and then I leaned into that trade and really got smoked. So I said, for my recovery, I need to focus, look, it doesn't matter if it's 5 red days in a row like this stretch, or if it's just 2 big red days. I had a setback, and it's one that's both emotional, but definitely financial. And I need to create a game plan. So my game plan following a spiral was first to acknowledge that I'm in a heightened emotional state, and then apply a restriction to my account, 5,000 shares max size. Then I went up to 6,000 on Thursday and Friday. I need to practice mindfulness, meditation daily, connect with discipline. Focus on building my cushion each day with small size, getting green and getting out, not overstaying my welcome, and produce 1 week of stable trading results to rebuild confidence. And then begin removing restrictions after recouping approximately half of the drawdown or after about a week. Over the years, I've had drawdowns, where I lose and then it's just sort of sloppy. And then I've had drawdowns where I take a loss and I have a pretty nice, clean recovery. I make my way back up and just move higher. And so right now, I'm in the middle of what would so far be a pretty clean recovery. I was down about 30 grand. I've recovered about half of it. So account in the last 30 days was at 160, dropped down to 130. Now it's at 145, which is pretty good. But, this could happen, right? And it could happen if I take the training wheels off, take the restrictions off, and go big on Monday. And then I could, start to have a stair step down. I've seen that happen to other traders. I've done it myself. So I need to continue to make small progress. And although trading with smaller size is going to prevent me from having one of those days, right now, I need to protect myself against one of those days. And so downside risk is what it's all about. That means I got to reduce my size until I can get a little bit more profit. But I'm not far away from being back at my highs, both for the month of March and also for all-time high in my account. It's just going to be unfortunate that I will have lost essentially at least 1 week, because I lost all of last week being net negative. And it's going to take me a few days and maybe all of next week before I recoup all of this. So that could be 2 whole weeks lost due to a few moments of emotional hijack. I mean, that very clearly shows how high the stakes can be. You've got to keep your focus. You've got to stay disciplined. And if you can't bring your best, then you shouldn't even, be trading on that day. And I wasn't able to bring my best. But this is part of trading, that we're going to all have ebb and flow. This is this is kind of the monster in the room for every trader. FOMO, the fear of missing out, ending a green streak. I actually talked to a trader on Wednesday who had a red day, and he was like, "Oh man, I'm so frustrated. I just gave back all my profit. Now I'm red." I was like, "How much are you red by?" It was like a couple $100. I was like, "Please tell me you will walk away right now and not make the mistake that I made yesterday." And he was like, "Yeah, I know. I probably should. Later, he said, "Well, kept trading, gave back all yesterday's profit. Big red day for me." And he was like, "I was trying to keep my streak alive." And it's like, why does it matter? Why do we care? Because we're human. Because we do. And so these little things will creep up and they will catch you. And that's just the beast of trading. No matter how many years of experience you have, you always have that little kind of, devil on your shoulder when it comes to trading. So you've got to work hard to stay disciplined. And the best thing that you can do, I think recognizing, these mistakes is obviously important. But so for me, I made myself a little doc here, which I'll show you. So I have now had 3 days of restraining myself from emotional hijack. I give myself a pat on the back there, but it doesn't mean that I didn't have high emotions on some of these days. So I went back and started tracking since the 1st of March. I had been tracking my trades in a journal, not like this, but I was doing every individual trade at the beginning of the year because I wanted to see whether or not some of my trades that were super aggressive, like slamming a stock at high of day, if that was actually working for me. I was like, I need to start tracking these metrics just to get a little more granularity on what's working, what's not working. Same with dip trades. Sometimes I take a dip and it just goes lower and I feel like that was dumb. So I tracked my metrics, and what I saw was that the high a day trades, even though they're risky and they do produce some losses, also are producing a lot of profit for me. So I was like, all right, that makes sense. The dip trades in total are producing profit, but they do sometimes give me some big losses. And what I sort of think about dip trades is that I should sometimes try to hold them longer, because sometimes I get a dip and the stock goes all the way back up to the high. And I sold it for like 5 cents off the low. And I'm like, I sold it way too soon. So I think if I can hold some of my dips a little longer, that could improve my profit loss ratio. But after this, but then of course I went away. I was in the Caribbean for a couple weeks, and I left my computer at home, or my charger, had to buy a new computer, blah, blah, blah. So I didn't have my Excel doc, and I was doing it in Excel. So this time I was like, I'll make a Google Sheet. I'll just make this easy for myself. And so just made a little Google Sheet here. This is super easy. And just went back to track each day from March and just sort of takes notes. The P&L from the days, the biggest intraday retracement, which is, in other words, I was up on the day, 1,000, 2,000, 3,000, 4,000, and then how much did I drop? So sometimes I'll finish here, but I had a huge intraday retracement, sometimes not. Sometimes I'll have a day where I go like this, I end up going red, and then I make my way back up. So, just to provide a little bit more color. And so I noted, obviously on the days where I have these big retracements is where I'm noting and remembering, yeah, I had pretty high emotions on that day. They were running hot. Days where I went from green to red, right? Green to red and then back to green. Yeah, my emotions are running hot. Again, green to red here. So, and then taking some notes of like the best trades, the worst trades, and then just taking some notes about, just kind of generally like how I was feeling on the day, which I can refer back to, later on. But both these days I was green and then went red. So, big trigger for me. On Thursday, I gave back 35% of my profit on the biggest drawdown. I did end up finishing at my highs of 4,300, but, excuse me, I'm still a little under the weather. But I had made about 4,000 or 3,500, gave back, almost half of it, and then rallied back up. And in these moments here, I was starting to feel a little bit of emotion creeping in. So I think that this, for me, this daily journaling is going to be a little bit more helpful. Unfortunately, the broker that I'm using doesn't let me import my trades until the next day to TraderView. So it's not easy for me to take notes on them. Also, a lot of brokers have this sort of problem where your trades get grouped kind of funny. Maybe it's saying 3 trades, but you're like, oh, I kind of took 4. But, well, it grouped one together because maybe you're still holding like 50 shares or something. So I've preferred tracking my trades a little bit on Excel when I'm trying to take notes on every individual trade or categorize each individual trade based on the setup that I took. For a long time, I haven't really been needing that level of granularity into my trading. So big picture, which I receive here, is totally fine. But I wanted to start getting into a little more detail. So I don't know, maybe I could do this in here. I know they have some note taking. You can add notes. I don't know. I think for me, it's just, I don't know. Like I said, maybe I could do all of this right here in this platform. I don't. But this visually for me feels better. So I don't know. I'm just going with what works. Not like it really matters all that much. But what I want to track is these intraday retracements. Oh, so on Friday, I didn't have an intraday retracement. Basically like zero. I don't think I even had a red trade in my big account. It was just steady. So, that was fine. Let's see. Oh, first trade of the stock, added too high. Liquidity wasn't great. Next one, big spreads, nothing else. Small account trade went down. Oh yeah, so right. So the trigger there was in the small account, which I actually wasn't going to mention in this episode, but it's fine. I had a trade in my small account, lost $250, whatever. But I was triggered, even though it's not a lot. I was feeling a little bit of desperation kicking in to recoup the loss. So I say, you know what? I need to shut it down, walk away here right now. This is discipline. So just these kind of notes, I don't know. I feel like it's helpful for me. If you are already doing it, that's great. If you're not doing it, it may be something you could think about just incorporating in your trading, even just daily notes, even if it's not on a per trade basis, because last week was tough for me. So now I'm in a state where I've got to still do a little bit of recovery. Monday morning, I'm hoping that I can sit down and have the good fortune that we have some great stocks on the scans. And I say good fortune because there's a little bit of luck involved. I mean, I'll either have the good luck that we have a great gap scanner or we won't. There's nothing I can do to control that. So I hope that we have some stocks have news, but if we don't, well, I'll just have to be patient and take it slow. So right now, patience is my mantra. Being patient with the drawdown that I'm in right now, being patient with the fact that, being patient with the fact that right now the market's a little cooler than it was a few weeks ago. Just trying to take it slow, take some deep breaths, and continue to hit these base hits. And try not to get myself sucked into the emotional thinking of, sort of where I'm at on the month or the year, and all of that stuff becomes an unnecessary burden. It's just not worth it. So anyways, that's just what I'm kind of going through right now. It's been a little bit of a tough week, but fortunately I had a good day on Wednesday, Thursday, Friday. So I'm hopeful that I can have some nice days early next week. Of course, Friday was my smallest green day of the week, but hopefully we can have a good start on Monday and I can just continue with day 4 of trader rehab, taking it slow and steady, and then, be back at it, on Tuesday and just continue this trend. By the end of next week, hopefully I will have recouped most of the loss from Monday and Tuesday. And then my profit for March will basically be from the first week. And well, gosh, is it already, where are we on the month? Now let me look at the calendar. The first week and the last week. Yeah. So 2 weeks might be lost because of emotion. And I have no one to blame but myself. It's my own fault. But these are the mistakes that we sometimes make, and we got to pay the price for it. So, not trying to be negative, but we really did have some great opportunities last week. It could have been a great week for me if I hadn't gotten in my own way. It was my own fault, right? Monday could have been a small green day. Tuesday could have been a small green day. And then Wednesday was still great. And then we would have had Thursday and Friday, and it would have been up 15,000 on the week. That would have been great. Instead, I'm down 15,000. All right. So live and learn. And as much as I say live and learn, the reality is this will happen again because we're all only human and we're trying to do something that's very, very difficult. So these things happen, and you've got to have some guardrails on your account in terms of how much money you have in there, just to make sure things don't get too out of hand when you have a loss. So I hope this episode has been helpful. This is a game plan for the week ahead. I'm looking forward to Monday morning. I'll be sitting down bright and early, and I'll see you guys with us. Oh, and by the way, in case I didn't mention, over at Warrior Trading, we've got our St. Patty's Day sales going on right now. So St. Patrick's Day sales going on. That'll give you a coupon code that you could use on your Warrior Starter or your Warrior Pro membership. Through Warrior Starter and Warrior Pro memberships, those are the only ways that you can watch me streaming and be part of our live trading community. So would love for you guys to join, and hopefully I'll see you Monday morning in the chat room. All right, thanks as always for tuning in. Reminder as always, trading is risky. My results aren't typical. And I'll remind you to manage your risk and take it slow. So see you back here first thing Monday morning.